Chargepoint stock price prediction. Okay guys, so in this video we're going to talk more about Chargepoint. So I'm not going to lie, it's been a very rocky road. As you see here, we are on TradingView. The stock is down around 47% year to date, and it is also down around 33% or so since the last earnings release. So I know a lot of you have mentioned in the comments you've been absolutely crushed by this stock, but we're going to talk a lot about the reasons why this stock has been falling and where I think Chargepoint is headed in the future. But before I get into this video, guys, I want to talk a little bit more about myself. My name is TJ, and I make videos on high growth, aka hyper growth stocks that you can buy and make a lot of money for the next 6 months, 1 year, 2 years, and down the road. So if you like stocks and you like money, please smash this red subscribe button to receive more video updates from me. But before I get into this video, guys, let's talk a little bit more about this amazing offer that is ending in a few days. So you have just 2 days left to get your 2 free stocks on Webull. Webull is an amazing alternative to Robinhood. And all you have to do is open a brokerage account, deposit at least $100. So you can click the link in the description below to grab your 2 free stocks worth up to $1,850. And as you can see here, this deal ends on March 31st, guys. So be sure to grab your free stocks right now. Okay, so let's go back to the chart. So I talked up Chargepoint a lot because simply it is the largest EV charging stock in the United States with a huge footprint in North America. So if you guys do, long story short, if you go to Google right now and you search for charging stations near you, and you live in any city, for example, I live in Washington, D.C., born and raised there, you're going to see that a lot of these Chargepoint stations are popping up. And Chargepoint charges 1 car every 2 seconds, and they've been around for over 13 years, so they already have a huge footprint in the industry. I would basically call Chargepoint the Tesla of EV charging companies. But, everything isn't roses, and there's definitely been some headwinds over the last couple of months. We're going to talk a little bit more about those in depth, but the company did report earnings, and now with the stock trading at such an exciting level of just around $20 to $21, I think there's a lot less risk here and a lot more upside potential than if you had been buying a huge position when it was around $43 or so. So quickly, we're going to go over that latest earnings release, and then we're going to talk about the investor call, and then we're going to jump into the numbers, and I'm going to give you guys my long-term price prediction on Chargepoint stock. But if you've already been watching some of my videos, you already know that I have a pretty ambitious long-term price target. But let's just get into those numbers quickly. So, as you can see here, I'm on Chargepoint's investor website. I'm going to link to this in the description below, but you can head there yourself. It's simply investors.chargepoint.com. And the company announced their first earnings report as an official publicly traded company on the New York Stock Exchange. 2020 revenue was $146 million, and they have a ton of cash on the balance sheet. So they have they added $600 million to their balance sheet, and right now they're holding about $146 million in cash, with a lot less debt. So there's no trouble, I don't think, of going bankrupt or something like that. So as you can see here, let's read what the CEO Pascal Romano said. He said, last year the global EV sector continued to show strength as EV sales grew despite a slow overall vehicle market, bolstered by policy trends that continue to accelerate the shift to electric in North America and Europe. In 2020, we continued to strengthen our market leadership position and expect our growth to be fueled by dozens of new EV models anticipated in 2021 across a wide range of segments and price points. With a strong balance sheet and capital-light business model, Chargepoint is well positioned to create shareholder value through broad attachment to the electrification of mobility for fleets and consumer vehicles. So a lot going on there, but I agree with all of it. So as you can see here, the last quarter, they posted around $42 million in revenue. So what I'm really interested in here is that full fiscal year revenue was $146, up from $144 million. So hold on a second. This is remarkable because we all know that during 2020, driving and was down 80%. So why is that? Well, obviously the global pandemic. A lot of people weren't driving because they weren't going to school, they weren't going to work, they were spending a lot more time at home. But the company managed to exceed revenue when driving was down 80%. So I don't think when a lot of people sold off this stock, I don't really think they realized that this was probably the worst thing that could possibly happen, because if people aren't driving their cars, they're not charging their cars. So this company is going to generate money off of people charging, which means people need to be on the road. They need to be going to the supermarket, going to work, you're going to the park, driving to pick up groceries. If they're not using their cars, this company is going to have a very, very hard time generating revenue. Yet it exceeded 2019 revenue by a couple $1,000,000 when drivership was down 80%. So I think that's so huge. And I think a lot of people didn't realize this when they ended up dumping the stock. So now let's talk a little bit more about the forward guidance. So this is really interesting as well. So the company is expecting around $195 to $205 million in revenue growth, total revenue for 2021. So this is for the fiscal year 2022, which would be all of 2021, with a 37% year-over-year growth. So that is phenomenal as well. This company is still charging, no pun intended, it is charging forward, and it will continue, I think, to lead the electric charging market. I don't really see any other company that's producing this type of revenue. Their revenue is basically exceeding all the other EV charging station stocks out there, exceeding Blink by a wide margin. Blink in the previous year, 2020, they did only $6 million in revenue. So ChargePoint is doing almost more than 20 times as much revenue. Their revenue is exceeding EVBox, EVgo, Blink, Nuve, all of these companies. So this is the top dog when it comes to charging EV charging stocks. So now I want to talk a little bit more about the actually investor call, because you can glean a lot of information from the investor call. So basically, investor call is when the CEO and the other corporate executives come on and talk about the company in depth, and then a lot of investment analysts from places like Morgan Stanley, Goldman Sachs, they ask questions. So what I did was I just head over to Seeking Alpha. I usually don't listen to the earnings calls, but I just read the transcript, because usually I think it's just quicker to find exactly what you're looking for. But it's a good idea to also listen to the call live. I think you probably get more information if you listen to the call and read the transcript. So what I want to talk about is, first of all, ChargePoint has been around for 13 years. So this is huge. They have a lot of experience, and they're not just, a brand new startup. This company, started working towards this movement 13 years ago. So they're a very forward-thinking company looking well into the future. They have a 71% market share of network level 2 charging in North America, and they have thousands of commercial customers, many of the Fortune 50. I believe on their website it mentions they have around 60% of all the Fortune 50 companies. And as you can see here, it projects, they say, by Bloomberg, New Energy Finance projects that by 2030, 29% of vehicles sold in the US and Europe will be electric. And right now, that number is so much smaller. So it's probably only like 2 or 3% that is electric. So they're expecting massive growth into the future. And then it says, as I've been saying on this channel for a while, and the bigger point here is that demand for our charging solutions is driven by the collection of EV models. No need to pick the next EV winner, because ChargePoint is an index for the electrification of mobility. And I think that's an excellent way to talk about this company. And then let's talk a little bit more about the in-depth ways that they generate money, and one of the reasons why revenue was up even though driving was down. So as you can see here, it says we sell annual high-margin software as a service subscriptions to ChargePoint Network, charging stations, parts, labor and warranty subscription, and design build services. We offer an recurring revenue model as an option where the charging station is bundled into the annual SaaS subscription. In the case of the fleets, all of that applies, and we sell additional software for charging schedule and energy cost optimization. So this is a diversified charging company. They're figuring out many different ways to generate revenue, and that's one of the reasons why revenue was up even though driving was down so much last year. So now let's talk about a couple of key points that I saw in the actual call. So it's another key point, as you can see here. While sales of overall automobiles were down 16%, EV sales were up 48%. So this is kind of pushing forward that new kind of smart car, that people are going to be using smart cars in the future. They're not going to be using these old legacy gas guzzlers that really, don't compare. The best comparison I can think of is comparing, a smart car like a Tesla or a Lucid Motors vehicle or something like that. You could compare it to the smartphone, like an iPhone or a Samsung Galaxy. Whereas these legacy car makers, they're still making flip phones, where the car doesn't really get smarter and it doesn't really do anything for you, and it's polluting the environment. So this is one of the reasons why I think ChargePoint is an excellent opportunity. So you can see here, let's talk about their footprint. As you can see here, they say we are one of the world's largest charging networks. At the end of 2020, we have more than 105,000 active public and private charging spots, with an access to 157,000 active public spaces to charge through the roaming integrations with other major EV charging networks across America and Europe. And it says we continue to aggressively expand our network and customer reach, activating more than 24,000 new charging spots and additional 100,000 places to charge through roaming integrations. And one of the great things I love about this company is that they're doing great things for the environment. More than 500 million electric miles were driven in 2020 using our charging solutions, avoiding 129 million kilograms of greenhouse gas emissions. So this is just awesome stuff. Awesome things to hear. It is exactly what I want to see from this company. So as I talked earlier, as we said, it says we expect EVs to make up less than 4% of new passenger car sales, with approximately 5% in Europe and only 2% in the United States. So this is a really key part of the video that I want to mention. 98% of the cars that are sold in the United States are still polluting the environment. So this is one of the reasons why I think it's so important to hold a stock like Chargepoint, because we need to support these companies that are really improving the environment for the long run. You know, having clean air to breathe is so essential to life. And the fact that 98% of the cars sold in America are still polluting the environment, this is the first inning of the EV charging market. You're not going to see the best returns from Tesla and Chargepoint and all these stocks now. You're going to see them in the next, 2024, 2025, when people wake up and realize that, the environmental impact they're making on the world is destroying all forms of life, not just human life, but plant life and, other creatures and land, air, and sea. So this company is one of, just like Tesla, is why I feel so strong and why full disclosure, I hold stock in Tesla and Chargepoint, because they're leading to basically a better environment and they're making money at the same time. So this is a win-win for me. So as you can see here, it says we had our best fleet quarter ever in Q4 from a billings perspective. And request for proposals activity was up 61%. So this is great. That means more and more people are interested in getting on board with Chargepoint and adding, electric charging solutions to their businesses, which is what we want to see. So now we talked a lot about, the business overview and things like that. One of the things I want to touch on before we get into that, a little bit more technical analysis and look a little bit more at these numbers, is that from a geographical standpoint, Chargepoint generates around 92% of its revenue from the United States and 8% from Europe. So this is basically an American company that's going to be generating the majority of their money in the United States. But the good thing is that the US and China are two of the largest EV markets out there. And the fact that, Chargepoint is at least involved with the United States charging market and has a smaller footprint in Europe, that's a great sign to see. So like I said, guys, you can check out this transcript call for yourself, but the video is kind of getting on, so I want to kind of get on to a future price prediction and talk more about that technical analysis. So here we are back here looking at the clean support that we have of Chargepoint stock. And as I reiterate on this video time and time again, we want to be greedy when others are fearful and fearful when others are greedy. So right now everyone's hating on Chargepoint stock. They're scared of it. This is the time that we want to come in and add a position. So I've been adding quite aggressively under $25 or so. And I believe that this is a strong support level. So if you guys remember some of my previous videos, when I talked about when the ticker symbol was still SBE, the stock started off at just $10. So even if you're accumulating here, there could be more downside risk, but it's only up 100% from the $10 level. So this is a wonderful opportunity, I think, for long-term investors. But now let's take a look at some of these actual numbers, and I'll give you guys my long-term price target. So there's some wonderful things that I noticed about Chargepoint stock. Price to sales ratio is 40. It's a little bit high, but just in line with other companies like Tesla out there. 146 million in annual revenue and expected to grow. 145 million on the balance sheet with only 57 million in debt, and only 277, probably after they finish a lot of those warrants and things, probably around 300 million shares outstanding total. So this is a phenomenal long-term. This is a long-term investment, because now only 2% of the sales, EV sales in America are electric. So this is a long-term investment, guys. And one of the most important things I want to reiterate on this channel is that we are here for a longer term perspective. So yes, there will be times where there's opportunities for a short-term trade. But at the end of the day, we want to have 1 year, 2 year, 5 year, 10 year investment frames, not 1 week or 2 week, because you know in the short run it's impossible to figure out where things are going. But you can bet your bottom dollar that the US EV adoption will soar from 2%. 2% is an absolute joke. And it reminds me of kind of where things were back before smartphones, where no one had one. Now, if you don't have a smartphone, you're considered weird. So that's good. The same thing's going to happen in this marketplace. People are going to start using electric cars and they're going to fall in love with them. And they're going to stop using these legacy gas guzzlers that are destroying the planet, and they're going to need to charge them. So when there's an explosion of vehicles on the road, you can bet they're going to be using ChargePoint's HomeFlex charger to charge at home. They're going to be charging on the go when they come from work, charging going to the grocery store, to school, to take their kids to school, to pick up their kids from school, and so on and so on and so on. So this is why I think this company is so well positioned. And now I want to talk a little bit more about my $3,000 future price target. So I know a lot of you guys have been giving me a lot of slack for that target, but we got to remember now that EV is going to be an absolute explosion. Right now, people, they're not really sure, but you got a lot of millennials that are starting to, you know, they're getting jobs for the first time. They finished school. They're starting to make more money. And millennials are more interested in electric vehicles than, say, you know, generation, X or baby boomers. So baby boomers grew up with these gas guzzling cars, and millennials are going to grow up and they're going to start driving these EV cars. And this shift is going to be even bigger. And then we have Generation Alpha. They're going to get older and they're going to be interested in, most of the people in Generation Alpha, the youngest generation, they're never going to own a gas guzzling car. So we have all of this long-term opportunity, and I think Chargepoint stock is a wonderful, wonderful opportunity for long-term growth investing. So as you can see, if you take a look at some of the investors in Tesla 10 years ago, not even just 10 years ago, maybe even like 6 or 7 years ago, we have people like Ron Barron, who bought a ton of shares of Tesla, and then what he did, 6, 7, 8 years ago made him, impressively rich, just so rich. Like he has 1 million shares of Tesla. It said Tesla stake's worth $600 million. So he made an investment when Tesla was cheap many years ago, and now that investment is handsomely paying off. So that's exactly what I'm thinking with Chargepoint stock. So to wrap things up, guys, I still have my $3,000 long-term Chargepoint price target, and I will not be selling a single share of this company because I want this company to do well. I like where they're headed. They're the biggest player in North America, and I don't want to have regrets like people who sold Bitcoin a couple of years ago and now they have regrets. So this is the same thing I'm seeing with Chargepoint stock. I'm in for the long run, guys. I'm only going to be adding more shares, and I hope it stays at this price for a little bit longer because I have some money coming in soon and I would like to even buy some more shares. But I think, this is the bottom. I think the Suez Canal situation, that was slowing down a lot of EV production. That's been alleviated. That's done. And you're going to see these EV makers pick up production, and they're going to sell more EV cars, and they're going to be more drivers on the road, and that's going to be more money for Chargepoint. So I hope you guys enjoyed this in-depth video. I had a lot of things to cover because I really didn't make a video on Chargepoint until the earnings, and I was waiting for a good price to come in and make this video because I think if you guys buy at $20 versus $25, there's just more upside. So that's it for now, guys. If you enjoyed this video, please smash the subscribe button and smash the like button. It really helps these videos as well. And be sure to check out all my other content. I produce a newsletter. I have a Discord chat. So just check out all the links in the description below. And did I remind you guys to grab your 2 free stocks over at Webull? Make sure you do that as well. That is ending on March 31st. So you only have a day or two to grab that. So that's it until next time, guys. Take care.